Welcome to TradeTheNBI.com. This is John. This report is for the 11th of March. Well, we're looking at a very weak DOC readings in the first place. We had dips below the red line, and what did we do? We just continued to drift a little bit lower. Got backed up as soon as we get to that 2735 level. A little bit of the draft below it, but then definitely caught a bid to it and pushed up, not enough to get above that 2762 level. You can see that we had the steel here dipping from below coming across, so the junction between it crossing above cyan would be significant enough for turnaround move. A little early for that just at this particular point, so I'd be surprised if they're able to break it out before then, because if we're looking at our shakeout, we're still making lower histograms, but even worse, you have the yellow below the blue, which is kind of the opposite of cyan below red. It's sort of like not a buy until that changes, and we have not moved back above. We're close to getting back above the red line on the extreme histogram here, which would indicate that a lot of the distribution has ended, but that's not the case at this particular point. So you have to go with what is, and at this particular point, even though we had that big decline, we ended up with a fairly decent intraday signal that showed the bottoming out of it and then the eventual rise, which pretty much negated most of the decline as it started. And here we are pre-market. We've already moved a little bit up and down, came back and supported right off that same 35 again, and are right around the 54 range, right in between. So we're close to the 62. That's going to become some upside resistance, but a break above it would certainly put the 27.8 back into play. So keep that one in mind. And again, we'd been talking about the NASDAQ was a little bit stronger before, but obviously it collapsed a little bit more, but did the exact same thing. In fact, it's been much better off given that it stayed above the ABMs. It only got to the ABM green at this particular spot, and then we're right just below the ABM. Let me put the values up so you can see what the ABM yellow is, 70.73. Good to see that the euro popped back just a tiny bit. It's a decent improvement there, but without the reset, anything that's coming up here is likely going to still have to retest and reset a little bit more, because when that steel stays that high up, it's difficult. The complete difference here, right here, when you have gold, where we were looking at that cross that happened from before, and boom, then once it crosses that orange, you're like, okay, I get the potential, and then boom, when it goes across the steel, that's sort of the giveaway. And it's just kind of how it works. We filled in all we were looking for from the retrace of the dip below the red line right here, which we matched, and we had filled in the positive extremes. So it's fairly clean from that standpoint. When we go to intraday, we were talking about it from the short that had gone through there, and it continued to go down, and then what we had was just this really deep red here that you see on the shakeout, and that's below that negative 13.5, but you could never really get any traction where yellow was crossing over until right about here. We finally got the spread that we look for, at least when it's below there, of about 2.25 points. In this case, it was just under 2.5, and that's like your first opportunity, particularly off of building P2 and everything else, which was nice. That kind of really adds to the confidence. Of the only issue with it was you're almost into an overbought with the extreme histogram, so the likelihood of slightly fading. But to me, what's significant is when that happens, you've got a nice algo line here, which was at the 27.29 level that we had from before, and we just kind of pivoted around from there and kept producing the same kind of orange dips below the red line, pretty close to the same level. So it's one of those where you're just like frustrated. This is not doing anything, but it's not also breaking down. So you got to go with that fact that you get the continued rising red in general. We also had gold rising, even though it was at the 0 level, well below the 23 where it started. It did make a new low fractionally. It was just a tiny move, and then it started catching up before DOC spread again, broke down a little bit, nothing too dramatic, though point-wise You're looking at going from, the 36 range to below 29, so still enough room to provide decent range. Let me increase the sizes so it makes the readings a little bit more pronounced. I'll just lift up the shakeout a little bit because it got into like a mucky shakeout period here where you're just kind of back and forth above the zero. But you have to play a lot of these anyway because you're not sure which one is just going to continue to go, so you've got to be with it. And last one happened right about here where we ended up making the dip, but you can see what happens here is this low gets taken out by the previous red, but when you move back above it, it also represents the potential next turnaround point. So that becomes the point to be looking for. And at this particular spot, then that one started to catch a little bit of action there, retrace, so it created the little ABC kind of construct, literally almost a 50% retrace from the high, right on the money, and then creates P2 effect, and then cyan goes below red, which is always a buy, and the rest was just an easy run right back up there, which made it nice because it was for me a transfer from the March to June contract, and that all seemed to go very easily off of the short from the lows. Was able to buy several of the dips on the splitting of the contract, so worked out just fine. We've seen a lot of positive extremes going through here that need to be revisited. The breakout one obviously at 37, but then we've already retested the next set right here. And that's usually the one that you're looking for, at least most predominantly, to get covered. And the fact that it happened right around 50% rising here, not a shock. The next set has just begun at right here, which gives us a low around 44.50. Of course, we're right at the 52.5 algo level from before that we've been bouncing around with as well. So this gives us opportunities to look for DSA short spread. Potentially got one building right here coming off that deep red, the deep move of cyan below red, which was very bullish there. So it creates this effective short snake, at least the starting of one. The problem you've got here is with this super high red, you need a pretty decent breakdown in it to suggest that you're going to see this fail. More likely than not, even if it does, you're going to hold right here. And even if we do retrace in between the middle of this early period, we're likely to revisit this high range again, because that's just what the algos like to do. They pre-test to see what kind of supply there is up there, let things ease back, and that gives them their next marker during the actual regular session. So we see that time and again. Sometimes they do change it, but in general, you get a high probability with that. And so if you have a signal that's going in the right direction, it gives you a general target range. Couple that with, on the downside, we already know what the positive extreme refill is. So it gives us a bunch of lines to work off of, given the signals. From a 50K standpoint, we had the breakdown that was taking place, and then boom, right at the bottom, we started to get the P2s, and then they dipped below the red line, and then it kind of crossed right over here from a checkout yellow standpoint, and then boom, confirmed itself slightly below the 23% range right there. And still, when you look at it from the broader perspective, it's quite a bit under where it was. So return back up to at least where even the 50% here is at 72 would not be out of the question. That would still put it within a bear configuration, but having tested that move, we get a couple of positive extremes, and they go all the way back down to the 33 range on the original breakout right here. So that's worth noting, so that you can be situated correctly. This happens to be that Dealcom Paint 2, and again, this is where it flips into a neutral setup if it's apps and a buy, and none of this criteria worked
from that signal. It wouldn't have been until later over here, and probably was avoided because of the positive extreme. And I will double check that one because it's worth noting, because sometimes when you do get those signals below the 23% and you already have a positive extreme, they tend not to move very far. So we could see a nice pullback into there that would then produce some more attractive configuration. As always, though, I will put up relevant charts as necessary. Trade well. We'll talk again later.